Volatile, that is one word to describe the stock market this week, swinging between steep losses and gains as investors try to gauge the risk. Factors such as high inflation, supply chain issues, COVID-19, and the possibility that Russia will invade Ukraine have all contributed to the instability in the markets. And joining us now to discuss is Joel Griffith, Research Fellow at the Heritage Foundation. Joel, welcome back. Always so great to see you. Let's get right to it. Let's talk about this roller coaster ride happening on Wall Street. What does it mean for investors, the economy, and how concerned should we be?
Well, for those that have investments in the market, this week has been definitely a roller coaster. Even intraday, we see price swings of several percentage points. This has not happened in a number of years to see this type of volatility. You have to go back to the start of the COVID pandemic, and I think it underscores the economic uncertainty that we're facing right now. We've had our market, the housing market, the stock market, other assets that have been pumped up by the Federal Reserve. We've had our Federal Reserve print trillions of dollars in order to fund the government spending, nearly $6 trillion supposedly to combat COVID. And there's a lot of uncertainty now, especially as we see the economy slowing down. And you still see several million people that have left the labor force since the start of the pandemic. These are all cause for concern.
Yeah, and you had just mentioned the Federal Reserve. As we know, Chairman Jerome Powell is going to hold a press conference about the interest rate hikes that are still to come in March. Talk to us more about that. What are you expecting to hear from him tomorrow?
Well, if you look at what's happened over this past year and a half, you had the federal government spending so much money, and all of that came from borrowing or from printing. And as that money has been released in the economy, that is part of the reason why you have seen prices increase at such a rapid level. And it's really starting to hurt families. Most of the people that are watching tonight have seen their cost of living increase in excess of what they've actually seen in terms of take-home pay. And a big part of that is because of the central bank's actions. And the fear is that a lot of this new money that's been printed, the fear is that this will be lent out and then deposited and then lent out again. And it turns into this multiplier effect of new money circulating through the economy. And that's why there's talk of raising interest rates in order to stop some of those new loans from potentially being made. There's really no easy way out of this. No one wants to see higher interest rates personally because it means that your debt costs are going to rise. But also, people don't want to see their cost of living continue to increase at the pace that we're experiencing it now. Government has caused this problem, and there is no easy way out of it.
Joel, do you think there's any relief in sight, when it comes to inflation? And also, should we be worried about something called stagflation? I've been hearing a lot about that today.
Well, there are a number of primary causes of inflation. Now, part of it has been the rampant money printing, but there's another side of that as well, and that's that we've seen our supply chain really messed up over the past year and a half, in large part because of COVID restrictions that have been put in place, not just here, but across the world. And that means ports that have been shut down, either partially or completely. You've seen shipping delays. The warehouses are packed to capacity in large part because we can't find workers to staff them. And you see trucking shortages as well. And there's many causes for all this. Now, as countries around the world finally begin to fully return to normal, I do think we're going to see some of those supply chain issues clear up. And that'll relieve some of the inflationary pressure. But unfortunately, we see a large number of actions the Biden administration has done, both in terms of incentivizing people not to work, in terms of the government printing money and more spending. All of those are going to be long-term price pressures. So despite the fact that the supply chain issues are clearing up, there are other concerns that I do think will continue to put upward pressure on prices. Now, stagflation, that's really a combination of slower economic growth combined with higher prices. And if government continues down this road of suppressing supply and disincentivizing people from work, if you continue to have schools that continue to shut down and parents not being able to be on the job, well, all of that is going to weigh on economic growth. And you very well could see slower growth along with a rising cost of living. And that would be the stagflation that none of us want to experience.
Joel, less than 30 seconds left, but I really want to ask you this question. As you probably heard, President Biden is now considering severe economic sanctions against Russia. That said, what type of impact could the conflict between Ukraine and Russia have on our economy, if any at all?
Well, what we're seeing right now with the hostility of Russia towards Ukraine and threatening an invasion, this directly stems from the Biden administration's weakness that they have exhibited from day one. Remember, from day one, the Biden administration completely capitulated to Russia's demands to go ahead and build a natural gas pipeline to Europe. This threatens our national security interests. This has threatened the interest of our allies. And if there is conflict, further conflict in this region, there is going to be an overlap because Ukraine sits along the borders of many of our allies and is directly related to so many of the countries that we actually trade with and are engaged with in the investment world. So this would be a very real threat to our economy as well as to our allies in Europe.
Okay, we're going to leave it right there. Joel, thank you so much. Always appreciate you coming on and giving us your time.
Thank you.
Thank you so much.